Welcome back to our journey of understanding tax in Nigeria. This is the third episode, and in this episode, we will unravel the concept of tax administration and the challenges faced by the Nigerian tax system. Hi, my name is Olatunji Abdulrazak. I am the founder and CEO of taxmobile.online. Welcome to my YouTube channel, A Stitch in Tax Saves Cash. This channel is dedicated to helping you stay on top of your taxes. We will provide you with tips and strategies to help you keep more money in your pockets and minimize your tax liability while you stay in compliance with tax laws. So, if you want to start taking control of your finances from today, hit the subscribe button below and click the notification bells to stay updated on our latest videos. In Nigeria, the regulation of taxation is grounded in legal frameworks. This involves creating important laws like the Act, bylaws, and decrees to make it a legal requirement for people to pay taxes. The administrative bodies responsible for tax collection and enforcement are defined by the tax code, along with delineation of their tax jurisdiction. Tax regulation in Nigeria can change based on factors like economic condition, financial complexities, welfare needs, and social requirements. The Federal Inland Revenue Services assumes the role of collecting and administrating federal taxes, while state governments are served by their respective State Board of Internal Revenue for taxes owed at the state level. Meanwhile, Local Government Revenue Committee takes care of taxes owed to the local government. To ensure coordination and avoid double taxation issues, the Joint Tax Board offers guidance, help harmonize double taxes, and suggest adjustments when needed. Nigerian tax system is organized into a decentralized system at federal, state, and local government levels. Each tier of government is responsible for tax matters within its jurisdiction, and the revenue generated contributes to government expenditures. At each level of government, specific bodies are established for tax collection. The Federal Inland Revenue Service administers key taxes such as company income tax, education tax, stamp duties, withholding taxes, and value-added tax. However, personal income tax and withholding tax for individuals fall under the purview of State Board of Internal Revenue, while local government administers levies. Let's go on to the principles of tax administration. Tax statutes serves as the foundation for tax administration, outlining tax rates, payment deadlines, assessment methods, offenses, and penalties. Tax administration involves a series of activities, including registration of taxpayer. Before any assessment takes place, taxpayer must register by providing pertinent information to the tax authority. Assessment of taxpayers. This evaluation involves determining tax rates, identifying basis period, and allowable deductions with the possibility of reassessment. Returns. Taxpayers in Nigeria are required to submit periodic tax return to the relevant tax authorities. The filing process involves the following key steps. Completion of tax returns forms. Individuals and companies complete the appropriate tax return forms, providing details on income, deduction, and other relevant financial information. Accurate reporting. Taxpayers are expected to report their income and other financial details accurately to ensure proper assessment and determination of tax liabilities. Submission to tax authority. Completed tax returns are submitted to the designated tax authority within the specified time frame. For individual, this is often to the State Internal Revenue Service, while companies typically submit to the Federal Inland Revenue Service. Tax collection. Following the assessment phase, the collection of taxes takes place and the method of remittance is determined by the respective tax authority. Compliance monitoring. This involves reviewing taxpayers' files, conducting office checks, and, when necessary, visiting taxpayers to gather additional information. Compliance enforcement. To maintain compliance, tax authorities implement various measures ensuring adherence to the applicable tax status. In summary, tax administration in Nigeria is grounded in legal provision, with each level of government having distinct responsibilities. The principles governing tax administration encompasses key activities to ensure compliance, efficient revenue collection, and the realization of societal needs. Now, let's move on to the challenges in the Nigerian tax system. We will break this down into key areas: the informal economy and the critical issue of tax evasion and avoidance. The informal economy in Nigeria comprises a significant portion of economic activities that are not fully captured by formal taxation structures. They often underreport income, lack proper record keeping, and heavily rely on cash transactions, which makes it challenging for authorities to track financial activities. And this results in potential revenue leakage. To address these challenges, two strategies can be used. 1. Simplify taxation procedures. 2. Education and outreach. In order to effectively capture revenue from the informal sector, there is need for strategic approaches that acknowledge the unique nature of informal businesses. Such strategies include voluntary compliance program. This involves simplifying the registration and filing process for informal businesses, providing incentives, and fostering a sense of social responsibility. Technology adoption. This involves using technology such as mobile payment platforms and digital records to facilitate easier tax collection from informal businesses. Collaboration with informal association. This involves establishing partnership with informal businesses, associations, and leaders to promote tax education, facilitate registration, and encourage compliance with their communities. Gradual formalization. This involves implementing gradual formalization programs that help informal business transition into the formal sector. Addressing challenges related to the informal economy is crucial for enhancing the effectiveness of the Nigerian tax system. Implementing targeted strategies that recognize the unique characteristics of informal businesses can contribute to increased compliance, expanded revenue, and a more inclusive tax system. Tax evasion and avoidance involve the manipulation of financial activities to reduce tax liabilities. While tax avoidance may involve legal methods to minimize tax payments, tax evasion in itself is illegal and involves the deliberate evasion of taxes through fraudulent means. Common methods used in tax evasion include transfer pricing manipulation, which involves adjusting prices in transactions between related entities to shift profit to jurisdiction with lower tax rates. Use of tax havens. This involves establishing subsidiaries or entities in jurisdiction with low or zero tax rates to reduce overall tax liabilities. Underreporting income. This involves providing false or incomplete information on income, expenses, or assets to reduce taxable income. Inflating deduction. This involves claiming exaggerated or fictitious deduction to reduce taxable income and consequently tax liability. Both legal tax avoidance and illegal tax evasion erode the tax base. This reduces government revenue and impacts the ability to fund public services. Distinguishing between legal and illegal evasion is essential for developing effective measures to address these issues, and this makes it easy to maintain a fair and equitable tax system. Key measures include strengthening the tax law, transfer pricing regulation, international cooperation, increased transparency, and whistleblower programs. Addressing tax evasion and avoidance is crucial for maintaining the integrity of the Nigerian tax system. Implementing effective measures can help protect the tax base, increase government revenue, and foster a fair and equitable tax environment for both individuals and businesses. And there you have it. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more insightful content. Also remember to watch our previous videos.